I show my top 10 largest positions in the public account. And so, which one of these stocks would I be the most excited to buy today? By the way, if you ever want to follow me on X, I always have that linked in the description area of all my videos. So I also have my Instagram link down there if you want to follow me on Instagram. But X, I post a lot of stuff. Instagram's a little bit more lifestyle stuff than stock stuff. X is a lot more like stock related stuff. So my top 10 biggest positions are Meta, AMD, Amazon, Celsius, Nike, Palantir, Cheesecake, Estee Lauder, Elf, and SoFi, which should not come as a surprise if you watch my channel a lot, right? Now, in regards to those stocks, which ones would I be the most excited to buy today? I mean, Meta, I would still be very excited to buy that today. Meta's trading at a forward P, a likely do-si-do right now, 22. Meta's a top 10, Meta's a double-digit grower top line, bottom line. So guess what, ladies and gentlemen? Like, you get a forward P at 22 on a stock that grows double-digit top line, bottom line, it's a buy, right? And with one of the best income statements, balance sheets, cash flows you'll find in the world, with Zuckerberg leading that company, like, buy, right? Is it as great of a buy as it was a few years ago? No. But you can't always expect, I could look at prices of stocks during the great financial crisis and be like, I want this stock. Like, it's just, it is what it is, right? A house in Vegas was like, $200,000 back in the great financial crisis. And I think an average home today in Vegas is like, I want to say like $500,000 plus. Could be like, oh, I want prices at this, but it's like, no, it's not realistic, right? AMD, for instance, I think that's still a good buy. Is it as attractive a buy as it was 6 months ago? Certainly not. But is it still a moneymaker? Yeah, because AMD is likely headed to 400 plus in the next 24 months. And there's a potential it goes 500 plus. So AMD is still a buy. Amazon stock. Looking at Amazon here, definitely a buy here. I love Amazon. I've been speaking a lot about Amazon recently on the channel. Not really this channel so much, but the main channel, Financial Education. So make sure you guys watch that channel too. But yeah, Amazon, whew. Listen, if I had to think about what some of the best risk reward stocks are in the market in terms of very low risk the next 5 years and a high probability of doubling up your money, you know what stock comes to mind? Amazon. Amazon comes to mind. Like, if I think about what are the chances you lose money on the stock the next 5 years versus what are the chances you double up or more than double up your money, Amazon's like, I think, one of the best opportunities you can possibly find in the stock market in terms of that. I think it's top 5 stock in terms of that, right? Celsius, growth beast. That, look at Celsius, bucking the trend. Market can go red today and Celsius still goes green. They've got a very special thing going on with Celsius in terms of growth numbers. So at the end of the day, like, Celsius just sees momentum really regardless of what happens in this market right now, right? Nike's, I think, suffering from tax loss harvesting here at the end of the year. So I wouldn't be surprised if the market goes lower. I wouldn't be surprised if Nike goes lower right along with it, because you're going to get tax loss harvesting, right? You're going to get people to say, you know what, I'm going to go ahead and take profits here, or not take profits, take losses against their profits. Oh my gosh, if anybody made profit on Nike, they must have been holding it for the last 20 years. Sorry, I lost my train of thought there. My kids were out there playing with the clowns in front of the house. They're out there messing with those clowns. It's Halloween time, okay? Palantir, I definitely don't like Palantir as a buy right now. I'm only holding those last 1,000 Palantir shares just as a kind of like, what if I'm wrong on Palantir? Because I think their revenue growth starts to decelerate in 2026. But I'm like, what if I'm wrong? Like, what if Palantir keeps accelerating revenue growth and goes to like a 60, 70, 80% level or something like that, right? I don't think that's going to happen. Otherwise, I would have still hold every Palantir share I have. But if it happens, I'm like, at least I still got a little bit of skin in the game. But that one I definitely would not buy right now. It's very, very high risk. Very, very high risk stock, right? Cheesecake Factory. And when I say high risk stock, I mean, like, what are the chances it gets cut in half? It's pretty decent. But the great news for Palantir is at the end of the day, they're still going to keep growing regardless of the economy, regardless of any of that. At a very nice double-digit clip. They got a great balance sheet. Obviously, Alex Karp knows what he's doing. So it's not risky in terms of like, is this company going to go to zero? No. But could that valuation get cut in half and the forward P go from a 300 to 150 if revenue growth starts to decelerate? Yeah, that's perfectly fair. And that takes Palantir from a stock that's 180 down to $90, right? So just something to kind of keep in mind there. Cheesecake, I love Cheesecake here. I understand there's a lot of worries about the consumer, the economy. That's all fair. Unemployment, all that sort of stuff, right? But at the end of the day, Cheesecake, you got to understand, here's the thing with Cheesecake. It's not the worst thing if the economy and jobs market gets a little worse over the next 12 months for Cheesecake. And the reason being is they need to build a lot of North Italia's and Flower Child's next, I would say, at least 5 to 7 years, if not the next 10 years. So if you can have interest rates come down, they can take out debt for cheaper, right? So they can build a lot more locations. They'll be able to get labor easier for their restaurants if unemployment goes up, right? And additionally, construction costs will be basically flatlining or going down if that sort of situation happens, right? And they might even be able to get land for cheaper as well. So if you were to talk about a economy that was a little weaker over the next year, once again, that might not happen because it's also possible the economy strengthens. But let's just say hypothetically it weakens, right? Cheesecake's in a great position. You could say, well, maybe their restaurant sales will go down short term. That's fine. Like, big deal. Like, that'll come right back as the economy comes right back. But the moral of the story is the biggest opportunity is those two expansions of those two chains. And it'd be much better to be able to build those as cheap as possible rather than paying sky high prices, right? Or not being able to get the labor for the restaurants that they need, or having to pay ridiculous wages because the jobs market's so tight at a particular time, right? So these are some things to all factor in here in regards to cake. Now, as far as EL, I still like that one as a buy. It's certainly not as good a buy as it was 6 months ago, right? It was like $50 stock then. It's almost $100 now. But that one's still a great buy. That one's got a huge turnaround going. I think it's going to 200 plus over the next 24 months. Elf, still a good buy. I mean, at the end of the day, I don't love it here, but I like it here still if I was to buy it. You know, when you think about how much Elf growth has for the next 5 to 10 years, it's substantial, right? SoFi, I don't love it here. I like it here still. There's a lot of worries about the banking system and things like that. So do keep that in mind. But SoFi, the growth rates have been ridiculous there. So as long as Anthony Noto's running everything at a high level in the background, like, and keep in mind, Anthony Noto's getting a lot of stuff off the books. He's managing the business in a way that is, I would say, more asset light than asset heavy. So do keep that in mind, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with.
Salesforce, CRM, was one of the best, most respected stocks for the longest time in the stock market, but over this past year, it's just been thrown out, down 18% over the past year, right? And people are like, when does this stock start to go up, right? Another potential tax loss harvesting stock at the end of the year, right? November, December. So before I go further on Salesforce, let me show you my numbers. Let me show you my bull case, base case, and bear case for CRM Salesforce, okay? I have them doing 14% revenue growth per year over the next 4 years under my bull case. This is using 1000xstocks.com, okay? I have them doing 22% net income growth. They shouldn't do a massive amount of hiring over the next, basically 26 to 29. They should run the company very lean. So much of that revenue should hit the bottom line. And keep in mind, they're going to buy back a lot of shares, so that will help their earnings per share even more. But if they can do 14% top line, 22% bottom line, in SaaS space, 29 to 34p is very fair for a company growing mid-teens revenue, and let's call it low 20s net income. That puts a stock at somewhere between $500 and about $27 and $617 come 2029, which gives me a compound annual growth rate well into the 20s, right? But that's my bull case. What about my base case? Base case is just a fancy way of saying what I actually expect. Here's my base case. I have them doing 12% revenue growth per year on average, 2026 to 2029. I have them doing 20% net income growth, 2026 to 2029 on average. 27 to 32p is very fair for a company like Salesforce at those sorts of growth rates in this space. That gives me an 18% compound annual growth rate on the low end, 23% on the high end, so we can call it 20-ish%. Listen, that's why I'm buying Salesforce stock right now. If you can give me if I can run my numbers and over the next 4 years, I get a compounding annual growth rate of 20%, I got to take that. I can't just be like, no, let me stay on the sideline because it might go lower short term. Maybe they're going to tax us. No. At the end of the day, you give me a CAGR of 20%. I'm taking that, right? Here's my bear case for Salesforce. My bear case is really bare. I'm only doing 6% revenue growth per year, 26 through 29. That'd be brutal. 10% net income growth. That would be brutal for them. And then 22 to 27 PE for a company growing mid-single digits revenue and low double-digit net income there. So gives me a compounding annual growth rate of about 3 to maybe 8%, somewhere in there. So even under my bear case, I don't lose money. So my bear case, I don't lose money. In my base case, I get a CAGR of 20%. Salesforce is a buy. There's just no debate. There's no debate. So the next question is, when does Salesforce stock start to go up, right? Because that you're looking at this and you're like, okay, this is great. Like, looks like a screaming buy, looks like a great stock to buy and be loading up on shares over this next 6 to 12 months. But when does it actually start to go up? Do we have to wait till 2027 for it to go up, or 2028 or 2029? Here's the deal on exactly when Salesforce will start to go up. Salesforce has a product they launched in the past year, Agentforce. Now, this is supposed to be Salesforce's next big product. Wall Street's not convinced that this product is the product yet. Once Wall Street becomes confident that this is a banger product, you will begin to see Salesforce stock go up dramatically. Not a small amount, dramatically. But they've got to become confident that Agentforce is the next level of growth for Salesforce. But here's the thing, ladies and gentlemen. We already have some proof in regards to this. Let me show you this, and this is important for you to understand this next point I'm about to make in regards to finding the next great opportunities in the market as well. Look at this. What I'm showing you right now is Salesforce revenue growth percentage per quarter over the last number of quarters, okay? Now, what you're going to find is a company had clear deceleration of revenue growth going on. They went from 11.2% revenue growth down to 10.7, down to 10.74, down to 8.39, down to 8.3, all the way down to 7.6. Then they flattened out. 7.6, then 7.62. Latest quarter came in almost 10% revenue growth. The inflection has already happened in Salesforce. This is a big moment for a company. When you have a company go from the growth keeps decelerating to then flatlining, to then going back up, you're at an inflection point in the business, and there's something fundamentally changing for the better with the business model. And so Wall Street's behind the curve in regards to Salesforce. They should already be buying the stock aggressively. They're waiting until like 100% convinced of Agentforce. And I'm like, they already need to be buying now. They need to be buying Salesforce right now. They can't wait until all of a sudden revenue growth goes to 11, 12, 13, 14%. They wait till then. They waited way too long. They need to be buying right now during this period. And so Wall Street's behind the curve. It's not the first time. It won't be the last time. They're always behind the curve, right? That's Wall Street for you. And so at the end of the day, Salesforce, in my opinion, is one of the best buys right now in the SaaS space, right? It's got one of the lowest risk profiles I can find in the market. It's got one of the highest reward potentials, right? And this comes from somebody that was an aggressive buyer of Palantir stock and made a fortune of money on Palantir stock, right? Treated me phenomenal. But Palantir comes with massive risk at this point in time. The massive risk in regards to Palantir is as soon as that revenue growth starts to decelerate, the stock's going to get absolutely obliterated. Not like, oh, it's going down a few percent. No, it's going to get obliterated. And the question is that next quarter? Is it the following quarter? Is it the following quarter? And Palantir comes with not a lot of upside because the valuation's gone so insane. The forward P on Palantir is like 300. The 2-year forward P on Palantir is like 200. So there's not a lot of upside potential left for Palantir, right? And the downside risk is significant as soon as that growth rate starts to decelerate, given where the valuation's at. So if I had to go Palantir or Salesforce over the next month or 2 months, who knows? Like, I wouldn't be surprised if Palantir outperformed for the next 1 to 2 months. But over the next 4 years, there's not even a question. Salesforce will dominate Palantir over the next 4 years, essentially, in regards to risk-reward profile there, right? And then Palantir will go through a crash at some point in time once those revenue growth starts to decelerate. It'll go through a crash, and it'll be a phenomenal time to then buy Palantir again, right? And so, there was past times that it made sense to buy Salesforce over a stock like Palantir. Salesforce had a better risk reward profile. And then there was times where it was better to buy Palantir over Salesforce. For instance, 2022, you got to buy Palantir at what? $6 a share, $7 a share, $8 a share, $9 a share. Like, easy peasy lemon squeezy, at least from my perspective on that, right? And you got to make fortunes of money. Right now is not that time, right? Now's the time to look at a stock like Salesforce over a stock like Palantir. And I wouldn't even mind cashing the rest. I'm holding Palantir for now just in case revenue growth went to like 70 or 80% or some insane number that I don't foresee happening. But if it did happen, I'm holding some shares for right now. But I wouldn't mind swapping out the rest of my Palantir for Salesforce at this point in time. Because I'm playing this game for the next 4 to 5 years, not for the next, 4 to 5 days or the next 4 to 5 weeks or something like that, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with.
Now, one of my stocks went up a lot here today, got upgraded by Goldman Sachs. We'll talk about why this happened and those sorts of things and my thoughts on this. So this was my best stock here today. Estee Lauder. Stock was up almost 6% here today, up $9,000 here today. That stock is now up almost $42,000 for me in the public account. My best stock. So in regards to today, that is, in regards to Estee Lauder, what's going on here? Okay, now's the time to load up on shares of Estee Lauder, Goldman Sachs. Estee Lauder is turning a corner and could return to top-line growth as soon as the fiscal first quarter of the year. With double-digit EBIT, that's earnings before interest, taxes, margins, by fiscal year 2027, which is coming up very soon for them, their fiscal year. This is not calendar year, this is their fiscal year, which is way before their calendar year. As the company's efforts to right the ship earns an upgrade to buy from hold at Goldman Sachs. The analyst Bonnie believes that the cosmetics company has entered a fundamental inflection point driven by strategic initiatives put in place by the management, including brand launches on Amazon. Awesome, love to see that. Oh, by the way, everybody wants to launch on Amazon, right? Nike just launched a store on Amazon very recently, and they said their demand's been much better than they had anticipated, right? Estee Lauder says we're going to have to launch our brands on Amazon. Everybody has, Amazon's, you got to be there, man. And TikTok, and its consumer-first approach to drive faster innovation. Quote, we believe management is taking steps in the right direction with its beauty reimagined strategic vision, and improving trends in the Chinese market. And that makes the stock an attractive buy at its current levels, advising clients to, quote, load up on shares. Load up on shares, right? Yeah, there's no doubt. There's no doubt. Like, at the end of the day, the reason I bought Estee Lauder stock is for those brands. Like, they're brands, you can't replace them. Those are phenomenal brands. It was just a matter of time for the management team got those brands in a position to really understand the new economy. The old management team was too focused on, like, the historic business, which is like selling in Dillard's, selling in Nordstrom and Macy's and these different department stores and things like that. And that's cool. That's still a business that exists, and that's fine. But you can't count on everybody just going to those sorts of stores. Like, people want to shop on TikTok nowadays, okay? Like, the amount of women that I know that will buy stuff on TikTok is a pretty large number. People want to shop on Instagram nowadays through Instagram Shop. People want to shop on Amazon. Guess what? Amazon, right? Like, this is what happens. Like, this is a new age economy, and you've got to have a digital strategy. You've got to be great as far as your marketing on digital as well. Look at how well Elf has done. Elf has built a serious, what is going to grow into a massive cosmetics company now, right? Through digital. Look at the Rhode company that they acquired here recently, and what Hailey Bieber's done there through creating that business and growing it through digital, right? And look what, obviously Kylie Jenner did, many, many, many years ago now at this point in time with her brand. And that was all digital. Like, you got to be digital in this age. And Estee Lauder was, just a historic company with phenomenal brands and phenomenal products. But to focus on just physical retail, you got to focus on also digital, and they're doing that, right? Now, I saw comments like this out there. This individual says, laugh out loud, right on schedule after the shares have nearly doubled off the lows near $50, which, the stock was in like the 50s range back in, that was during the whole tariff drama back in April, right? This one says, looks to me like time to load up was in April. Yeah, fair, right? Time to load up was in March and April, right? And so a lot of people are kind of making fun of this analyst from Goldman Sachs and saying, it was a time to load up in March and April. And I agree, like that was the time to load up. But you got to understand this about these analysts is a lot of times they will not start going positive on stock until they get a lot of proof that like a turnaround's happening on a stock like this. And also they won't go really positive like this until the stock price has already started to go up significantly. So in the further that stock price goes up, the more analysts that come out and start getting positive and positive and positive. So you actually this is kind of like first or second inning in regards to the Wall Street community starting to turn positive here in EL stock, Estee Lauder. But, that's just kind of something I want to say. And another thing I got to say in regards to EL stock is you understand this stock is, oh my gosh, I think a bird just hit the window. Windows must be too clean or something. This stock was $370. $370 a few years ago, right? The stock today is $92. That was before the inflation hit and they had really troubling numbers over the past few years. And so just understand this stock could go back to 370 over the next number of years, right? And even if it doesn't go to 370, you could say it could easily double to a 180, could it not, right? 180 would be, guess what? Half of this number. So the stock, even if this goes to 180, you're still going to be down 50% from where it peaked at back here. So understand there's a long way to go here. And the way I put it to you like this, Meta stock, the crash happens in 2022, right? Meta stock goes into the 80s, $88 at the lows, right? I still have some shares in the public account that I bought at $93.12. And there was a big batch I bought at $88.94. I can't remember if that was this portfolio and I already, cashed those shares, or there was a different portfolio. $88.94, I remember I got some at. But this batch here, the 650, was at $93.12. The stock went all the way into 80, like $88.04 or something like that it bottomed at, right? So it goes from the 80s and then it goes to 160. Wall Street starts to slowly get a little more positive on Meta in the turnaround, right? So at that time you could have said, hey man, stock's doubled. Where were you guys at? This is silly. Now you're upgrading it. Well, you should have still bought Meta at 160 because guess what happened? Meta then went from 160 to 320. And Wall Street got even more positive on the stock. And you could have thought, okay, we're almost back to all-time highs in the stock. There's not more upside ahead. Then the stock doubles up again right in your face. Goes to 640, right? Now the stock today, 715. The stock, I would say within 12 to 18 months from now will be $1,000 plus. $1,000 plus on Meta within the next 12 to 18 months. So, are we going to double this one up to 1280? Yes, we're going to double this up to 1280, and it probably comes in the next 2 or 3 years. So just because you missed a double up doesn't mean there's not another double up coming. When you got that sort of opportunity to massively grow earnings, you got it, right? Now, I posted this also on my X page. I said, let's start preparing for 2026. Fireworks are going to be here at the end of 2025, but we already need to be on 2026 mentally. We must grow our wealth every year despite market conditions. That's very big, ladies and gentlemen. I don't care what happens next year. We've got to grow our wealth. I don't care what happens the following year. We got to grow our wealth. We've got to take this no prisoners approach to our growing our wealth, where we got to say, we don't care what Trump does, what China does, what the tariffs do. We're going to find ways to grow our wealth, regardless. And it's hard to do, especially if you're in a big downward market or things are volatile. I don't care. We got to grow our wealth. That's the approach you got to take year in and year out, and expect that from yourself. Expect to grow your wealth every single year. Doesn't matter what happens in the market. Some years maybe are going to be banger years for you and you're going to massively increase your wealth. Some years might only be a slight increase, but we got to focus on growing every single year. At this time next year, we need to be richer than we are right now. At the following year, we need to be even better the next year, right? Not always easy to do, and that's fine. We don't mind putting in the work. We can grow in 2026.